Get ready for the dictation. Start. Which pocket of the government should be enriched has taken 44 years to decide a classic case of what ought not to be the factual matrix. The Appellant Corporation National Cooperative Development Corporation was established under the National Cooperative Development Corporation Act 1962. The preamble of the NCDC Act reads as under: an act to provide for the incorporation and regulation of a corporation for the purpose of planning and promoting programs for the production, processing, marketing, storage, export and import of agricultural produce, foodstuffs, industrial goods, livestock, certain other commodities and services on cooperative principles and for matters connected therewith or incidental thereto. The functions of the Appellant Corporation are set out in Section 9 of the NCDC Act, which is inter alia to advance loan or grant subsidies to state governments for financing cooperative societies, provide loans and grants directly to the national level cooperative societies as also to the state level cooperative societies, the latter on the guarantees of state governments. The funding process for the Appellant Corporation is set out in Section 12 of the NCDC Act by way of grants and loans received from the central government. The Appellant Corporation is required to maintain a fund called the National Cooperative Development Fund, which is inter alia credited with all monies received by it by way of grants and loans from the central government, as well as sums of money as may from time to time be realized out of repayment of loans made from the fund or from interest on loans or dividends or other realizations on investments made from the fund. Section 13 mandates maintenance of a fund and the same reads as under: in furtherance of this, as and when surplus funds accumulated, the Appellant Corporation invested the idle funds in fixed deposits from time to time which generated income. It may also be noted that income by way of interest on debentures and loans advanced to the state governments / apex cooperative institutions are credited to this account. Even though the Appellant Corporation is an intermediary or pass-through entity, it is a distinct judicial entity. Its taxation status is as follows: in so far as funds are received from the central government, these are treated as capital receipts and hence are not chargeable to tax. There is no dispute about this. With respect to the interest component, it is treated as taxable income and is logically taxed as business income. The issue which has arisen for consideration is whether the component of interest income earned on the funds received under Section 13(1) and disbursed by way of grants to national or state level cooperative societies is eligible for deduction for determining the taxable income of the Appellant Corporation. This was as stated herein contrary to the earlier accounting practice and arose for the first time for the assessment year 1976-77. Accordingly, the factual matrix pertaining to this aforementioned assessment year has been taken on record. The aforesaid endeavor of the appellant corporation did not succeed before the assessing officer. The AO opined that the non-refundable grants were in the nature of capital expense and not a revenue expense and thus disallowed the same as a deduction. What weighed with the AO was also the fact that the grants received from the central government were in the nature of a capital receipt exempt from tax. The AO noted that no deduction as short for has been claimed in the previous assessment years. Of course, subsequently, the stand of the appellant corporation as the assessee was that the same was a mistake and they could not be bound by the same for the subsequent years. This round went to the Revenue Department. Stop.